the major driver for the markets will be the December quarter earnings for HDFC Bank. What are the key expectations, Amit?
Suyash, most brokerage firms and analysts are expecting healthy numbers, though net interest margins will be under some pressure due to high cost of funds, and the net interest margins may remain stable QOQ, quarter on quarter, at around 3.4% to 3.6%. Earlier this month, HDFC had announced their gross aggregate advances at 24 lakh 69,500 crores as of December 31st, 2023, registering a growth of as much as 62.4% year on year. Domestic retail loans jumped as much as 111% year on year and 3% quarter on quarter. Commercial and rural banking loans grew 6.5%. Corporate loans grew 2%. Going forward, analysts expect the bank to have healthy liquidity coverage due to the merger effect. So year on year right now we cannot really calculate, but due to the merger effect, the numbers would be healthy going forward, with return ratios being aided by robust growth visibility in the year to come.
All right, and as you rightly pointed out, the numbers on a year-on-year basis are not comparable because that are just of HDFC Bank alone, whereas on a quarter-on-quarter basis they are comparable because they'll include of both HDFC Bank and HDFC. The merger took place back in July 2023. But on the whole, HDFC Bank has a weightage of about 13% on Nifty. So the stock and pretty much banking stocks in general will decide the course of trade in the second half of this session, as the numbers come out only after the market hours. But in the October to December quarter, the Q3, HDFC Bank surged somewhere around 12%, outperforming Bank Nifty that surged about 4% or so. But if you look at the year-to-date 1 year returns, the stock has largely underperformed the banking index. It's somewhere up around 4%, whereas the banking index, which remember has been a laggard among the other sectors, that is up somewhere around 7%. So HDFC Bank has been a relative laggard in a sector that is already underperforming. But to discuss that and more, let's bring on Mr. Sudip Bandyopadhyay, Group Chairman at Inditrade Capital. Sir, thank you for joining us here on News 9. Always a pleasure speaking to you. Now, HDFC Bank, we were just discussing what are the street's expectations, but for you, what are the key variables that you will be keeping an eye out for?
You're talking about HDFC Bank specifically?
Yes.
As far as HDFC Bank is concerned, net interest margin is going to be extremely important to my mind. That we know HDFC Bank is under compulsion to raise a lot of deposits, and that's the reason why I think the cost of deposit has been going up. And how they maintain the net interest margin and how they increase the net interest margin will be something to watch out for. Of course, the credit growth related commentary of the management post the results will be also of interest because there is on one hand they have a deposit mobilization target to meet multiple regulatory requirements and also the loan growth. So we'll have to see how they're balancing that.
Good morning, Mr. Bandyopadhyay. As I see, the stock is down today in the negative at around 0.26%. Now, going by the numbers, apart from net interest margins, what they announced in December, for December 31st, whether it is domestic loans or it is gross aggregate advances or it is commercial and rural loans, all have jumped by big margins. Do you see that as an indicator of a positive outcome in the stock to be performing better than it has performed in the last 1 year?
Well, I have no doubts in my mind that eventually HDFC Bank will definitely perform better than what it has performed in the recent past. The bank has a tremendous potential. I think these temporary challenges which they had post the HDFC Limited merger, the challenge was they had to mobilize huge amount of deposit and also keep the costs down. And that deposit mobilization was required for two purposes. One, as I was saying, for meeting the CRR, SLR kind of a requirements. And the other was, of course, to support the loan growth. See, end of the day, the loan growth and deposit growth has to go hand in hand. You can have a mismatch for a short period of time, and you can bridge that with some other kind of borrowings. But eventually, in the long run, your deposit growth and loan growth rates have to be similar, at least very close. So I think that is what the challenge is. And if they have been able to grow the deposits very well, I'm pretty confident the loan growth also will have been there.
Right, and as we speak, the Jyoti CNC automation, which is the first listing of 2024, that has made a debut on the bourses. The stock has listed at a premium of about 11% at rupees 370 rupees a share compared to the issue price of about 331. But Mr. Bandyopadhyay, coming back to the company overall, at least what we are hearing from the experts, it looks well positioned. But there are some financial hiccups for it. It has a negative return on equity. The PE, at least at IPO valuation, is relatively high. It is at about 324 times compared to the industry average of about 50. What's your view on this stock? Is it one that investors should hold for long-term gains?
Well, we did skip, and we recommended skip as far as this issue is concerned. And you hit the nail on the head. The valuation at which it was being sold, I think, was little out of line, and that's the reason I believe that it's better to avoid. Yeah, long term, everything can be good, Suyash. So, well, it's a very good thing to say that in the long term it may be good. Of course, it can be good, but I think we have to live and progress in the short term as well.
All right, so perhaps wait for some bit of a correction to take place before making a fresh entry into this position, because I want to understand from a fundamental standpoint, how do you view Jyoti CNC as a company?
The business, there's no problem in the business. I think the business is good. The valuation is what was a bit of a challenge. So maybe the time correction will lead to a better valuation and entry point. Maybe price correction straight away will offer that. So let's see.
All right.
Mr. Bandyopadhyay, earlier in the show we had spoken about a PSU stock that had hit an all-time high in IRFC, Indian Railways Finance Corporations. Now I was looking at PSU stocks as such. Most of them have given huge returns in the last 1 year. I'll name two that are not even priced very high. One is NTPC, that is at 315%, has given 89, almost 90% returns in the last 1 year. ONGC has given 61% returns over the last 1 year, and IRFC itself almost 325% returns in the last 1 year at 140 rupees right now. Are these the stocks that one should look at right now, because they are not even high priced, and it could add a lot to the portfolio of investors, new investors especially?
Well, I have been a fan of NTPC for a very long time, and I have been recommending NTPC. I think last 2 years almost, and I continue to remain bullish on NTPC. So as far as NTPC is concerned, definitely yes. If you have a time horizon of 1 year plus, please go ahead and buy NTPC. That's what has been my recommendation. Look, I think NTPC has transformed itself from a pure play thermal company into a thermal as well as green energy company, and that transition has worked out very well. There is huge amount of demand, incremental demand for power, and NTPC being the largest and the most established thermal power company has very well harnessed this incremental demand and progressed their own business, both on the thermal side as well as the green energy side. At some point of time, value unlocking also can happen by separate listing of the green energy business or some such other structure. So NTPC, definitely yes. I'm not very confident about IRFC at current valuation. It has moved up very fast. I'm not saying fundamentally the business is wrong. With the way kind of expansion of railways is happening, financing will be required, and they will have great opportunities over the next 2 to 5 years. But the valuation looks a bit stretched, and I will not recommend buying at current level. As far as ONGC is concerned, the challenge has been lack of discovery, lack of new resources for a very long time. I think that's unfortunate, because that's the premier exploration company as far as India is concerned, and we'll hope that gets corrected. It was languishing at a very low valuation, and it has moved up from those levels. But should I recommend a buy when the market is on fire? I will not, probably. I will say let's wait and watch. There are better stocks to buy at current level. ONGC also I'll give a pass.
All right, and talking about better stocks to buy, I think Reliance Industry now that is a giant that has woken up this year. The stock has given phenomenal returns in 2024. In the last 13-14 sessions, it has risen about 7% or so. What's your view on that particular counter? Is this the kind of breakout that we were hoping for?
Absolutely. I think this was on the cards for a very long time. I think Reliance was languishing. If you go back, I think June 22, post June 22, Reliance was just hanging around there without doing anything, whereas the entire market was on fire. So it had to happen. And remember, inside Reliance, there are 4 companies actually. The traditional oil and gas business, which includes the petchem pit. Then we have the telecom. Then we have the retail and the green energy business. So I think as far as retail and telecom is concerned, these are well-developed businesses generating revenues, profits, and EBITDA, and expanding continuously. And they're the largest player in the respective spaces. Green energy, there is huge commitment for investment, and that's pretty much happening as we speak. Oil and natural gas, I think there also a lot of activity, but it's a mature business. Petchem has been under pressure for some time. GRMs, keeps moving up and down, so there are volatility in that business inherently, but it's immensely profitable overall. So I think sum of parts is significantly higher than what it was quoting at. So we will not be surprised if it moves up to 3,300 to 3,500 levels in the near future.
All right, another 220 point up move could be seen on Reliance Industries. That's a view coming in from Mr. Bandyopadhyay. Sir, always a pleasure speaking to you. Thank you for joining us here on News 9.